China's latest attempt to control its stock markets has cost the government there more than $1 trillion. Trading on Chinese stocks was suspended on Thursday after a key index fell 7%. That triggered a so-called circuit breaker system designed to prevent major declines. But China has now suspended its use, and the markets have strengthened with the help of the Chinese central bank. Well, for more on this, we're joined by Pamela Ambler, who's in Hong Kong, where stocks have recovered after a poor start to the trading year. Pamela, these circuit breakers were lifted late on Thursday after another volatile session. What's been the response there on the markets?
Well, we're calling it a relief rally here today. People are saying China finally did the right thing by suspending the circuit breaker mechanism. The threshold was triggered twice in 4 trading sessions since the beginning of the year, and an online poll showed that 86% of voters saying that this circuit breaker is unreasonable and that mainland investors were treated like guinea pigs in China's capital market experiment. And what was initially created to curb volatility actually fueled a global panic. And keep in mind, the Chinese market is unlike more mature markets. They have a lot more retail, or what you would call mom and pop investors. They aren't used to these fast and furious rules, and that in itself causing a lot of panic. Beijing is now going back to the drawing board, and they may or may not come up with a new mechanism, but what they did keep in place is a maximum 10% ceiling or floor for any individual stock on a daily basis.
Well, Pamela, one thing we know for sure is that the Chinese government likes to try and interfere in Chinese markets. And there's a lot of talk about the Chinese currency at the moment. How's that looking?
Well, the PBOC, which is China's central bank, they set the midpoint for the renminbi every single day. And today, rather than guiding it lower like it has been, it actually set the midpoint firmer for the first time in 9 sessions. And it's specifically guiding the onshore CNY currency higher, lifting some of the selling pressure. But that might just be a temporary solution, as we're looking ahead to some big China data points coming out this weekend on inflation, and also next week on trade data. Those will help determine whether more policy moves will be made to instill confidence in the markets. Back over to you.
Well, Pamela Ambler, for us there in Hong Kong, thank you for now.